Hey guys, welcome back to the channel McNallie Money, the new home of power mining analysis. In today's episode, Anthony Power and I are going to be dissecting the expansion of the CoreWeave core scientific contract, now adding an additional 112 megawatts to this existing 12-year agreement. Now, in addition to that, we also received July production results from Hut 8, Marathon, and IREN, some really interesting figures within these results. So we want to talk about that in today's video as well. Before we do though, please take a second, smash the like button, you guys. Big help to myself and the channel. If you're not already subscribed, McNallie Money, feel free to join and let us know in the comment section below what you make of this core scientific contract, production results for the month of July from the mining community, and your outlook in terms of the price of Bitcoin for the end of August. Now, with that being said, let's get into today's video. Okay guys, so that's right. Today's video, very exciting news. Luckily, Anthony, coming off the heels of yesterday, which was an absolute bloodbath in the market. So it's nice to see some positive sentiment returning to the space. As we always say, volatility comes with this sector. And today is definitely an up day for the market, for Bitcoin, and for the Bitcoin miners. So Anthony, starting to see some life back in the portfolio. How are you doing over there this morning?
Doing well today, better than yesterday. We saw a lot of volatility, like you say, and Bitcoin prices sort of starting to get probably a little bit closer to where they finished on Friday. So, but we know in this space, volatility happens regularly, and you got to be prepared for miners to go up 10, 15% and down 10, 15%. And we saw the Bitcoin price drop significantly in the last day or so, and that really shook the miners up, and yeah, there's a lot of people thinking, this could be end of days here, but it turned around, and those people who were, you can always say in hindsight, those people who had the opportunity to get in some of these miners when they were really low. I mean, I think IREN was just above $6 for a short period, maybe 20 minutes yesterday, and it finished in like close to $8.50. So if you'd have got in at that price there, you could have made 30% in one trade, in one day. That's the volatility of these miners. That's why people are in this space, because they like that volatility. You go and buy a typical banking stock, you might be waiting 3 or 4 years for that type of percentage return. But the mining stocks can give you that on a daily basis. But you've got to be like, understand the market and know what you're doing to sort of like come in that. And good luck to those that did buy it at the real dip yesterday, because all it looked like it was doing was in free flow, and how it turned around was quite amazing, based on all the macro economic indicators that we talked about in yesterday's podcast. So there was reasons for the Bitcoin price falling. The potentially in a third world war, we've got the issues with Japan and their markets at the moment crashing through the floor, and lots of other global news coming out. So Bitcoin was just taking a similar sort of like similar action yesterday, and so you can understandably some macro economic news does impact Bitcoin price. We've seen it happen before, and it's good to see that within 24 hours there's been a little bit of recovery from that. Still got a way to go, but it's still hovering in that sort of 55, 56 range today. So having gone down to 49, and I know some people are buying at 49 Bitcoin. You ever see a 4 in front of the number? That was people saying, well, that's an opportunity to buy. So good luck to those that bought Bitcoin as well.
Most definitely. I was able to pick up some at 75,000 Canadian, so close to the lows, but not quite. You're right, Anthony. Bitcoin's hovering at 56,107. I was going to correct you. You said volatility up or down 5-10% in a day, Anthony, but on yesterday's trading session, we were looking at 20-30% on some of these tickers, as you rightfully said, IREN, and we're going to actually get into their production update later on in today's video as well. I also wanted to highlight, Anthony, it took every ounce of you not to correct me saying good morning and saying good afternoon over there. Anthony's obviously about 8 hours ahead, so I like to joke with him on that one. Now, good news, Anthony, especially for core scientific fans this morning. an expansion of the historic and really groundbreaking CoreWeave deal. So you've been referring to this in many of our discussions as the biggest news story of the year, the one that really cemented the industry, put some floor pricing in for these HPC data centers. CoreWeave has now come out, as you kind of anticipated, and said, hey, you know what? We want to exercise this option. We want to expand the deal by 112 additional megawatts. So there was 230 total additional megawatts up for option, I guess, or expansion option. They've exercised 112 of that. That brings this deal, Anthony, north of $6 billion in terms of total contract value for the 12 years. No wonder you're calling this the deal of the year, hey?
Absolutely. This is the one that changed things. We knew a few of the miners had moved into the HPC space, led by the likes of Bit Digital. So we had Sam Tabar on the podcast a number of times this year explain what they were doing, and that, you know, they're not the size of Core Scientific. They're a small miner, but got into the HPC space earlier than most people with a customer, and a customer that wanted to expand. So, you know, in August, their expansion takes them to 92 million. But you know, this is all sort of like small change when you look at the Core Scientific deal, and it looks like they haven't given us a total breakdown of numbers, but when they refer to the revenues increasing by 2 billion, if you look at what they received for the first two parts of the contract, so initially it was 200 megawatts with a 70 megawatt extension. They effectively got the same deal for the extra 70 megawatts, and now they're saying 2 billion. And if you do the maths and look at how much per megawatt you were getting revenues, then it absolutely stacks up. The 2 billion is literally at the same price they're receiving for the first 270 megawatts. Now, you know, what does that mean in terms of profit? We know that from the 270 megawatts, after the initial couple of years where the capital is repaid back, and bear in mind, they're still achieving about 30% margin after all costs and capital repayments in those early years. So it's still a profitable business. But once them capital repayments have been repaid, you're looking at 80% margins across the board. And 80% margins in terms of profit for the 270 megawatts is just under $850,000 a day profit for like the remaining 10 years of the contract. Now that they've had this extension to that deal, so the extra 112 megawatts, you're looking at circa $1.25 million a day, or just under $450 million a year in net profit, not gross profit, net profit. So that's all costs. So that's the, you know, bear in mind, as we explained before with this contract, Core Scientific don't have any responsibility for the energy contract. So CoreWeave will negotiate that contract with the energy provider. Effectively, Core Scientific are providing a facility that comes with power, but the power is a pass-through cost to CoreWeave. But having a facility that can accommodate, you know, 382 megawatts, and Core Scientific have those facilities, and they're growing other facilities now to make way for the refurbishment of some of their current facilities to move into the HPC space. So, you know, we were very fortunate to go down to the Denton facility back in the beginning of June and to speak with, you know, the whole of the Core Scientific team led by CEO Adam Sullivan, and, you know, had a great explanation of what's happening. At that point in time, it was a 200 megawatt deal, and still a great deal at 200 megawatts. But he indicated in that meeting, we're looking to go another 300 megawatts. And people were suggesting, with the bullishness of that presentation that we were part of, that it was imminent we were going to get some more information. And, you know, lo and behold, a couple of weeks after that investor day, you know, they announced a 70 megawatt increase, and now, you know, we're less than 2 months from the initial announcement, which happened, or sorry, 2 months exactly from the initial announcement, which happened on the 3rd of June. We're announcing another 112, and, you know, who's going to bet against CoreWeave not taking up the remaining 118 megawatts in the near future? But even if they don't, $6.7 billion deal for 12 years of what I would certainly say is predictable revenues and predictable margins. And that's the great benefit of this. And if you think about, the mining companies that are coming out with their Q2 results now, this is where the challenge is for mining companies at the Bitcoin price at the moment. And we've said before, if the Bitcoin price gets to 150, 200,000, perhaps the conversation changes. But at the moment, the Bitcoin price is around 56,000. And when we come on to IREN's result, we'll talk about how that price at the moment is becoming a challenge for some miners. But no, outstanding update today, timely update. I mean, their results come out tomorrow. So interesting that this announcement came out today. Results come out tomorrow. And we're hoping to try and get Adam on the podcast this week if we can to get that update and learn more about this deal, learn more about earnings, learn more about how their balance sheet is probably going to be strengthened now with the fact that the share price has been doing really well since January, since they came out of Chapter 11. And so, everything around Core Scientific at the moment this year has been a real positive news story. There hasn't been any downside. In Q1 this year, they had the highest amount of free cash flow of all the mining companies. So what does that mean in simple terms? A, they produce more Bitcoin than everybody, and B, they had more free cash flow. So by receiving the revenues in from mining, and they were selling their Bitcoin because they had to under their caveat, having come out of Chapter 11, and what their costs were in terms of cash costs. If you take the cash costs away from their revenues, which are in cash, that amount is called the free cash flow. So if you're a positive balance, and they had over 80 million positive balance in Q1, no miner got anywhere near that. So they were the sort of like in terms of that metric, and in fact, producing the most Bitcoin as they had done for the previous 3 years. It was a great Q1. This news story in June was like, it is the biggest news story of the year, and speak to any of the Wall Street analysts, and they'll say that they're now starting to focus on the HPC side for these mining companies. And I'm sure that when the Bitcoin price rallies further, they'll shift their attention back to mining. But at the moment, HPC seems to be driving the news.
Yeah, it most certainly does. Really hard to argue or find a weakness right now with Core Scientific and Adam Sullivan. He seems to have the Midas touch. And even this mandated selling of Bitcoin, Anthony, that's really worked to their favor here during Q2, as we've now seen the Bitcoin price pull back quite substantially. Core Scientific not having to deal with any of those FASB write-downs or unrecognized losses like some of the other big miners. Now, we're going to come on to a few of the big miners in a second here. We've got production out from Marathon and IREN, as you rightfully said there, Anthony. But before that, we want to talk about Hut 8. We were actually fortunate enough to go see Asher and Sue in person in Nashville, got some great insight into the company, talked with other investors, and we actually met a number of key contacts, which we're going to have on the channel. The first of which is an immersion expert, really focused on building out some of these world-class facilities. So great time with the Hut 8 team. They came out with their production results for July as well. And as you and I were talking about, Anthony, Hut 8 is really pushing into this diversification mantra. They've pulled back on their self-mining. This is really only a small component of their managed infrastructure portfolio now. And it looks to me and seems like Asher now has everything pointed in the right direction here. So in terms of self-mining, 88 for the month. We'll get your thoughts on that in a second, Anthony. But I wanted to call out the operational hash rate currently sitting at 4.7 exahash. If you compare that to their managed service at 13.4 or even their hosting at 8.5, you can see it represents only a small component of their portfolio. Now, the other component here with Hut 8 I wanted to talk about, Anthony, hard to overlook, is their HODL. So over 9,100 Bitcoin, even at today's prices, that's still nearing in on $600 million in terms of a war chest that Asher has at his disposal. So thoughts on Hut 8, Anthony? A lot of Bitcoin, a great balance sheet, and a really good looking strategy here under Asher's new leadership.
Yeah, you know, if you look at Hut 8 and you know, you can see the similar comparison with the likes of Bitdeer in terms of these are two companies that we have included as self-mining companies for all our analysis, but actually self-mining for both these companies represents a small part of the business. So with Hut 8, you know, you've got this big managed services, which effectively was brought as part of the US BTC business. And then you've got hosting business, which was predominantly theirs as well. I mean, Hut 8, the original Hut 8 did have some hosting, but they ceased doing that about 3 years ago because in them days, it was found that the hosting businesses weren't as profitable. And for hosting businesses, you've got to have really, really low power rates because if miners are sort of like paying 4 cents or 5 cents a kilowatt hour, and we'll come on to IREN in a second. The challenge is going to be how do you pay a hosting fee on top of an energy fee, that price at the moment in today's prices are you actually make profitable. So it'll be interesting to see Hut's results. Now, the fact that you've highlighted their HODL and they've got the third largest HODL of all the mining companies, only Marathon Digital, who've got, you know, over 20,000 Bitcoin now, and the likes of Riot, which are getting close to 10,000 of effectively self-mine Bitcoin. You've got Hut in third slot there, and you know you've got the likes of CleanSpark, who probably got another 2,000 lower that, so close to 7,000 with CleanSpark. But they've maintained that HODL. What they've been doing looks like they've been just selling effectively their production most months. So you know that 9,100 has been around about that figure for most of this year. So they haven't really utilized it to maybe make some capital purchases. They've probably been selling it to pay their operational monthly costs. And so, you know, if they've got a war chest, you know, when the right deal comes along. Now we know that they've been building out, you know, sites there. So the expansion site in Texas there, that 205 megawatt site, they've been working through that one really quickly to get that online. And so, you know, they've got a, you know, we look at power as being sort of the limiting factor for some of these miners who are able to get power. Well, Hut 8 have got, you know, 1.3 gigawatts of power at their disposal. So that gives them optionality on how they want to progress. And I'm sure that Asher and the team at Hut are going to start looking at, you know, what businesses will bring in the best returns for them, and for also more importantly for shareholders, because shareholders, you know, really want to see a return from Hut. You know, one of the miners that were in 2021, the original Hut share, you know, was one of the sort of the darlings of 2021. It was like effectively, you know, as popular, if not more popular than the likes of Riot Platforms and Marathon Digital. And you know, one of the three oldest public miners out there, along with Bitfarms and Hive Digital. So they've been around a lot. They were based in Canada, but since they've merged with USBTC, they've moved their office now down to Miami. So they're US based, and that brings with it the opportunities to list on certain indexes. So they can go on the Russell index and be more, you know, be more part of any of these indices that companies have to buy a basket of shares. So represented from all the shares in that indices. So that, you know, that helps them get more access to capital that way. But yeah, we'll see what the results come out. And I think Asher's, you know, he stipulates, I think, given till Q3. So that sort of like takes them up to September. But you've got to say in the first 6 months of his tenure, things have been moving in the right direction. I mean, you know, the share price did get to over $20, and yes, there's been a pullback in this last few weeks, but every share's pulled back in the last few weeks. But it did get to $20. Bear in mind, when he took over as CEO, it was something hovering around $6 or $7. So, you know, they had a bit of a run up there. We'll want to see some reasonably good results. The 9,000 Bitcoin on the balance sheet obviously will have an impact on their results because under FASB rules, that's going to have an unrealized loss of the amount of Bitcoin times about $9,000 each. So, you know, that could have something like 81 million in terms of an unrealized loss. So there's no chance of them coming in with a net income. But what we want to see is their cash flow position. So again, free cash flow is what drives. If you can't pay the bills, That's a problem. If you can't pay your energy, pay your staff, then you've got a problem as a company. So that's what people are looking at. Yes, we know the miners are going to be, pretty much every miner will be in the red through August as they issue their earnings. We've seen probably two of the biggest miners release already. So Riot and Marathon. I think Riot were 85 million in the red. Marathon were 199 million in the red. So those are, and it doesn't get any easier for any other miners either. That's going to start releasing. Even the miners that haven't got the HODL are still going to find that Q2 challenging with regards to like the halving and the lack of rewards coming through in that last sort of 1.5 months and the impact of that. But from a key free cash flow, we've heard these miners talk about how much they can mine a Bitcoin for. So we'll be seeing the proof in the pudding when it comes to cash terms. So you can say as much as you want on a monthly update, but the cash terms in your quarterly update will tell exactly the position that you've been paying to mine each Bitcoin. And actually, it was interesting. We'll cover it tomorrow in a bit more detail, but it's interesting to see the cost that Riot and Marathon were spending, and they were both inside the Bitcoin price. So they were mining at a profitable cash flow position for every Bitcoin mined during that period. So that was a ray of light from results that were expected to be not as good.
Yeah, they sure were. You talk about results for Hut 8. We've got them coming on to discuss results on the 15th, Anthony. I'll throw up our chart or calendar here. So this week, Bitfarms on Friday. As you alluded to, we're also trying to get Adam Sullivan and Core Scientific on potentially tomorrow or at least Thursday to talk about results and obviously this big CoreWeave announcement. We've got Bitdeer on the 13th, TeraWulf on the 14th, Hut 8 on the 15th, as I just mentioned, Soluna on the 16th, Cypher making their debut on the channel on the 20th. Then we have Dennis Porter on the 27th, Satoshi Action Fund founder, SATO Technologies on the 29th with Romain, and then DMG on September 3rd. So no shortage of interviews and CEO content coming up for you, Anthony. Now, before we move on, the last piece on Hut 8 I wanted to get your take on, Anthony. I actually asked Asher about this in person as well. He was understanding of the concern, I suppose. Just the fleet efficiency, 33.4 joules per terahash. This is likely one of the highest or worst efficiencies right now of the publicly traded miners. We're starting to see some pretty good rates on the S21 Pro Plus and the S21 Pros. Do you think they're just waiting for this next generation of chip? Do you think they're not really worried about the self-mining? Where do you think that fleet efficiency is going to come into the conversation?
Well, the simple answer is on fleet efficiency. We know that Hut 8 haven't bought any new machines for a few years now. I think the last time they bought new machines was probably 2021. And so if you're not buying new machines, then you're maintaining some of the older S19 machines and even older machines. So an S19, some of the first edition of those machines are around about 30 joules a terahash. So if they've got an average efficiency of 33, it means they might be utilizing maybe some S17s as well as S19s. And compare that to say CleanSpark, whose efficiency is just under 23, I think 22.89, around about that figure. By having those machines in place, it means that you're able to mine Bitcoin significantly cheaper. So if your efficiency is 30% more efficient, then you're saving 30% more in terms of cost. And we know, if you look at TeraWulf's update, and we'll come on to IREN's in a second, but look at TeraWulf's update, they spend, in terms of energy, $36,000 to mine a Bitcoin at their efficiency. And so if you then look at, if Hut were mining at the sort of like, at a similar power cost, they won't have the power cost. I don't believe they won't have the power cost that TeraWulf one of the lowest power costs. But if their efficiency is sort of 30% more, it means that they're paying an extra $10,000-12,000 more per Bitcoin in energy prices just because their machines aren't efficient. So, but at the same time, you've then got to go out and buy these machines, and they're not cheap. These machines are still expensive. They are cheap today compared to 2021. So when we went through the first bull cycle for my last period, Even the likes of Riot and Marathon, who were buying 30, 40,000 machines in an order, were probably getting it for around $30 to $40 a terahash. But those companies that were buying smaller orders, some of them paid up to $80, $90 a terahash. Now, this year we've seen miners probably paying, $14 to $16 to $18, depending on which of the T21, S21, S21 Pro. And these machines are half the efficiency, or twice as efficient as those original S19 machines. So, but you still have to have that capital. And bear in mind, you haven't got access to debt that you had in 2021, because the market, current economic climate would mean it's not really advantageous to take debt when you'd be paying 19, 20% interest rates. It's just not fulfilling to do that. You can sell Bitcoin if you have a stack of Bitcoin to help you pay for it, or if you're big enough, like some of these big miners, you can use your ATM to raise capital. But not all the miners can do that. And HUT, bear in mind, they probably have to wait. Maybe they have to wait 12 months before they have access to a ATM, because of the fact that they merged. So they created this new company, HUT 8 Corp, at the end of last year. And they relocated to Miami. So normally, if I'm led to believe right,
correct, Anthony, 12 a year. Yeah.
Yeah, it's 12 months. So this happened to Bitdeer when they list on the Nasdaq. They're a Singapore company. They waited 12 months before they could use their ATM, and then as soon as the 12 months is up, or just before, they were announcing imminently that they would be able to use that, because it's a tool that's available to them. So. Yeah, so that's my point. They need to get more miners in self-mining, new miners to raise that efficiency and reduce that cost. But it all depends on their strategy. What Asher and the team feel is the way that they can make more money. Will they make more money from a margin perspective on a managed service or a hosting deal, or will they make margins or bigger margins when the Bitcoin price rises through self-mining? And from my perspective, self-mining is probably the most profitable business, but obviously you have to have the Bitcoin price supporting that.
Well, you sure do. And speaking of Bitcoin price, the next one we want to come on to is Marathon. You look at their HODL, you guys, in excess, just shy of 21,000. So 20,818. So Anthony, every $1,000 Bitcoin moves is essentially $20 to $21 million impact to the balance sheet of Marathon, I guess, from an FASB perspective. In terms of mining for the month, 692 Bitcoin. So if you were to adjust this back to pre-halving, getting close to about 1,400. I know we saw that high in December of 1,800 Bitcoin, but this was a pretty strong month for Marathon, getting their operational hash rate up over 27. I was pretty pleased with these numbers.
No, it was actually a very good month for Marathon, and we talked about December was probably the last good month they had, when they mined 1,853, and then it dropped to just over 1,000 in January. But this month, they had a turnaround, so they had mined significantly more than they did in the month of June. Which they mined 590, so 692 in July. Their operational hash rate also increased from 26.3 to 27.5. Their energized hash rate also slightly increased as well, from 31.5 to 31.8. So everything was on the increase this month. Their actual Bitcoin production per hash rate at the moment, it looks like they could come out, in terms of the peer group miners, they could come out as a top miner this month in terms of that metric. Now, bear in mind, Marathon also benefit from having their own mining pool, and some of the transaction fees they've been able to obtain from that, having their own pool there, have been probably higher in some instances than what some of the other pools have been achieving. And bear in mind, if it's their own pool, they're the only miner there, they're getting all those transaction fees. So it might be that some of that benefit has helped them improve this month. But bear in mind, we're in the month of we're actually in August now. This is a July update, and the last time we were talking about a great update from Marathon was in December. So we want to see these updates on a regular monthly basis. We can't have 1 month and then the next 6 months they're just scrambling, trying to, to get through. They're at 31.8, and it's quite interesting. We've got 5 months left of the year, effectively. So Marathon's total hash rate guidance for the end of December is 50 exahash. That's 18.2 exahash. We looked at Riot yesterday. Riot are at now 23.3, and they've got to get to 36 by the end of the year. So they've got just over 20 exahash. We've got Core Scientific. They've got to do another 20 exahash by the end of the year. We've got IREN, who released their results today. They're just over 10 exahash now of installed hash rate. They've got to get to 30. So Bitfarms at 11. And they got to get to 21. So of all the mining companies at the moment, Bitfarms have probably got the easiest amount to achieve. Some of these other miners, you're looking at an average of about 4 exahash a month. Now, yesterday, Riot increased their hash rate, installed hash rate, and also they increased their operational hash rate by over 4 exahash. They've got to do that every month for the rest of the year just to get to the target. So, and we believe they'll get there. We believe they'll get there, and we've also said previously we think IREN are going to get there as well because of this one site. And if you look at some of the news, the photographs that come out, the satellite photographs that come out from some of these facilities, you can see the increased scope of some of these buildings going up. And so, those two firms there, but Marathon have got another 18 to get this year. Now, they have got their own sites, so they can start putting in some more efficient miners into these sites, take out some of the older S19 machines, and effectively you can double your hash rate just by replacing machines. If you're going to put in S21s, replace S19s at 30 and replace with S21 at 15, for the same space, you've got double the hash rate. So, and we know that Marathon have got the treasury. I mean, the treasury for Marathon, they've got something like 1.3 billion in terms of Bitcoin valued at the end of July, and another 230 million of cash in the treasury. We know that they used a significant amount, 100 million in July to buy Bitcoin. So it looks like, I was trying to do the numbers there, it probably looks like 1,600, 1,700 Bitcoin was purchased. So if you want to be able to calculate the 100 million, you can do quite easily, because we know what the balance was at the end of June. We know what the production was in July. We know what the new balance is now. And so the difference there is what they purchased, that 100 million. So they're also look like they're trying to implement some sort of a micro strategy type scenario where they're buying Bitcoin. Now, we know back in 2021, 2022, other miners decided to buy Bitcoin during that period and ended up selling it at literally half the price. So, it can go against you. But Marathon, what they've been able to do, probably more so than most of the miners, is they've been able to utilize their ATM with far more ease because of the size of their market capitalization. So if they want to, and also the fact that they are the biggest, one of the biggest traded shares on the stock market, and certainly the biggest traded share in the mining space. So if your average volume of trading shares is 49-50 million a day, and you want to sell 5 million shares, no one's going to notice. So they can raise, significant amounts. And the share price a couple of weeks ago was probably, was it $27?
I have it pulled up, 27 down to 15.37 yesterday.
But when it was 27, if you wanted to sell, a million shares and get 27, no one's going to even notice a million shares in a day because they're trading 50 times that. So, you look at that and compare that to, say, DMG or Soluna, who have probably a volume of less than a few 100,000. You want to sell a million shares, you can't do it. And then if you want to sell 100,000 shares, because you think you can hide that, you don't get the level of return to start using that money like Marathon can do. So they have obviously used the ATM, and we saw from their shares that they had an issue as at the date of the report, was quite a significant amount. So they've been utilizing that, but it gives them the ability to make these deals when they need to. So, they've bought sites this year, they've bought Granbury sites this year, and they've bought other sites this year. So they've got quite a significant amount, of infrastructure there. Fred was telling me when I met in April in London that he's looking to have something like 80% of his total fleet under their own infrastructure by the end of the year. So they ain't stopping at 55%. They've still got a significant amount of infrastructure to look at buying. And we know that they've got the treasury to do that.
Yeah, really good to see such a productive update from Marathon in terms of all these new metrics and efficiencies really coming into fruition for the company. The name of the game, though, Anthony, as you say, for Fred and Marathon is consistency. And that's really what we're looking at in terms of our market position. We sound like the Wall Street analysts with their HPC analysis, Anthony, looking for consistency and the ability to project out revenues, but that's really what it comes down to here.
And full disclosure, Bryce, I'm a shareholder in Marathon.
As am I.
I want Marathon to mine, this amount of Bitcoin every month and produce this type of report every month, because if they do, it means that hopefully the share price increases and I get a return for my investment. So, like everybody else, I want to see them do that. But the months that they have produced these type of updates have been few and far between, and they are the biggest mining company in the world. We just want that consistency. So people out there will criticize me and you for not supporting Marathon. Of course we support Marathon. We're both shareholders. We want it to be successful as much as every other person who has shares in Marathon out there. But we have to believe in it. We live in a reality, and at the moment there have been other miners who have performed, better over the recent period. So let's hope that Marathon can start to move in the right direction. And they're a beast of a miner. So can they do it? Yes, they can. Will they do it? Time will tell.
Very fitting. We'll see in their August production results how they continue up on that July story. Now, saved IREN for last here, Anthony. This one is creating a lot of buzz on social media right now on the X community. So IREN put out their production results, came out with 222 Bitcoin. So that was kind of as expected, or as would be expected. The number that was not as would be expected is the power cost per Bitcoin. So they're coming out with north of $61,000 per Bitcoin in terms of energy cost. Now, you put a tweet out about this first thing this morning. A few people were asking, is that the right figure? Dan Roberts actually was able to jump in and say, hey, you know what? That is the right figure. We're working through some of our energy strategy right now. There's a variable component. He talked about some of the negative energy rates they've seen in the past. Anthony, let's get your thoughts on IREN and power cost here.
Yeah, so you have about 2 or 3 miners. So we've got the likes of TeraWulf, you've got the likes of SATO Technology and IREN, who month by month put their energy cost as part of their monthly update. So it's, one thing you can't fault IREN for is transparency. They list all their business units, they list the revenues, they list the margins. And so in their today's update, they list the July position, but they're also showing the June and the May position, so people can, even have a look at the trend for the last 3 months. It's all there in front of you. So you look at the May in terms of electricity cost to mine a Bitcoin. So this again is post-halving. So this is a full month post-halving. It was costing $35,475 in May. That increased to nearly $40,000 in June, $39,466. However, in July, we've seen that amount increase to $61,677. Now, bear in mind, the revenue they received by selling their Bitcoin during the month was only $61,306. So in terms of monthly financials, they didn't even mine enough Bitcoin to meet their energy costs. And that's a problem because, energy cost is one part of the cost. You still have to pay your staff. You still have to pay all those G&A costs that these miners rack up in terms of things like professional fees, legal fees, you've got marketing costs. So, in previous months where you've had that buffer, where the revenues were, in the previous 2 months were 66 and 65,000 respectively, so give you a nice margin above your energy costs to pay for those costs. And we'll see, in their quarterly earnings when they come out, that I would imagine they've got free cash flow for the period of April, May, and June. This July position is sort of like quite disturbing because it's the first miner to really be transparent to say at the Bitcoin price at the moment, there's a bit of an issue. Now they have turned around and said the increased electricity costs in July were attributable to higher energy hedge pricing in the summer month at their Childress site. So we've not, where it's usually volatile and they can do some trading opportunities, there wasn't as much as that. So, in previous periods, they've actually had months, and if you go back to August last year, they actually had a negative cost for the month. So actually they were actually paid to mine for a whole month last August. And, it just didn't happen this July. So, what the company are now doing is they're going to reassess it's their future energy pricing structures. So, I'm sure that Dan, when he comes out and gives an update at the earnings point of view, he will talk about this because this has been picked up today by, a lot of people in social media as to, it's quite clear. I mean, somebody asked if I'd typed the wrong number in, and then I said, look, just go and look at the update. The update's very transparent, and he came back to, yeah, it's accurate. And I'm saying, well, it might be accurate. Hopefully it was a typo, maybe. But if you read the update, they do explain in more detail. And as you rightly say, Dan has come out and explained about July on X earlier today to try and resolve the speculation out there.
Now, Anthony, a question for you, because you've talked about this a lot in the past, that if you're able to create some type of margin by mining with your machines, even if you can't pay all of your overhead, then obviously you want to have those machines on. Now, I guess playing devil's advocate, why would IREN not have just turned these machines off, not had to pay the electricity cost, and not had any wear and tear or depreciation, I guess, additional usage on their machines?
I'm what you call a chartered management accountant. So, my specialty is dealing in cost. And within costs, we have a term called contribution. So if you're a company and, you have two sets of costs, you have direct costs. So in terms of mining companies, the direct costs are generally the energy cost that's required to mine Bitcoin. And some companies will also include in direct costs some of the key people that actually maybe work in the facility directly, managing those machines directly. So not people working, say, in the finance team or the HR team or in the back office or management or leadership. They are not direct costs. They are overhead costs. So in direct costs, you want to make sure that your direct costs are lower than your revenues, because you need some sort of a contribution from that to pay your overheads. Now, ideally, you want to pay all your overheads. However, if your direct costs are higher than your revenues, then you have to make a decision as to whether you could argue, in this instance, that if IREN had switched off the Childress site for the month of July, they would have effectively been in a better financial position than they are, because the energy price is actually higher than the revenues. Now, the difficulty for mining companies is to know on a day-to-day basis how close they are to that figure. And when you look at it, it's we just articulated there's only $300 just over $300 between the amount of revenue per Bitcoin, the amount of cost per Bitcoin. So it's not a significant amount, but what it means is they have no contribution to pay any of their overheads. So all the staffing costs there, and we know they've got a lot of staff because they're building, out that facility at Childress with over 300 employees at the moment. So hopefully they can work out the strategy going forward. And there'll be a lot of reliance on the fact that in previous cycles the Bitcoin price has rallied. The challenge is that how much impact these macroeconomic issues that we've been highlighting the last few days, and the economy in the big the G7 countries, so the economy in the US, in the UK, in Canada, in France, in Germany, in Japan, Italy. So how those economies are doing on the global stage, and in UK it's not great at the moment, and actually I believe UK are operating better than some of these countries we've just mentioned, and we still feel it's not going great here. And then you've got all the other issues, the wars in the Ukraine, the war in the Middle East, the potential more conflict wars coming on. Then lots of other indexes like Japan's, we talked about the stock market there dropping yesterday. The impact of all these is that's going to subdue the Bitcoin price from getting to where people expected it to get to in terms of previous cycles. Is that holding it back? Because this year, the second biggest news story this year after the CoreWeave deal was probably the ETFs, buying Bitcoin left, right, and centre for the first sort of 6 months of the year and building up massive holdings of Bitcoin, in their treasuries, and so this will be a challenge if the Bitcoin price, is at the moment. If they're still paying 60,000 plus for energy, and the Bitcoin price is 56,000 for a Bitcoin, will we see more curtailment in August than in July, or are they prepared to weather the storm until the Bitcoin price rises? So it'll be interesting to get Dan's perspective on this. I mean, it's great we can just sit on the sidelines and discuss this, but we want to see what the mining company has to say. So
well, what's interesting there, Anthony, because they sell every day, you can't even make the argument of, hey, we're going to mine it at a loss right now in hopes that it'll go up down the road with a hodl. They're selling every day, so they're literally
they are. That was their strategy, and it's helped them up to now. Obviously the challenge now is, can they in the future turn a margin to cover those operational costs? So those operational costs for July weren't paid. But on a couple of positive things from the update, let's not all negative. That was one line there, and it is a concerning line, and Dan's already responded to that. But there was some positive news. Their hash rate increased from 10 to 10.5 in terms of installed hash rate. Again, it's got to be 30 by the end of the year. It's got to be 20 by the end of September. So you're looking at effectively 5 exahash per August and September to get to their next target, and then you're into the sort of like close to 3.5 exahash per month for the last 3 months of the year to get the next 10 exahash in there. So they've got a really important 5 months, and they think they can deliver ahead of schedule. So this will, time will tell. Now we can see the buildings, the photographs coming up now, and the amount of buildings that are starting to see the shells of those buildings and the foundations for the ones they're starting to build. So we think there's a lot of activity there. They can increase the activity with more staff if they need to, but these targets have been set in stone, and it'll be interesting to see how the market reacts to any miners that don't achieve their targets.
And as you say, Anthony, we've still not seen any miners come out with revised targets for this year. Do you think we're going to start to see some statements revising those targets down, or do you think they're going to continue to push until the last possible option here?
I mean, it's difficult to say who's not going to make it. So, Bitfarms need about 10 or 11 exahash. That's probably doable. It's a couple of exahash every month. Riot on its one site, and the fact that they can replace miners at Rockdale with twice the efficiency and get the hash rate increase that way, so they can make big strides without having to produce extra buildings in terms of more efficient machines. Marathon have got quite a lot of facilities, so it's going to be a case of increasing at more than one facility. How do you manage that? Bear in mind, in terms of staffing, they're not a big company. I think the last count was between 60 and 70 staff. Compare that to Riot, who've got 500 50 staff, a beast of a company in terms of staffing. And, when you go down, look at Corsicana, you can understand the size of the facility there and the amount of staff working. So I don't see too many problems with them there. CleanSpark just seem to be actively buying sites at the right time to grow their hash rate. So you're not going to probably bet against CleanSpark doing it. They have failed in previous years. Last year they failed. They only got to half their original growth target of 20. They got to 10. However, by February this year they got to 16, and it's up to 22 now. So, but they've still got to get to 32 by the end of the year. So they've got to do another 10. And these are not small numbers. I mean, IREN are 10.5 at the moment, so CleanSpark have got to grow effectively the size of IREN are to get to their target by the end of the year. I'm just trying to work out. I wouldn't bet against miners not doing it. I think there's, if you're going to state these big numbers, you better come up with them. Otherwise, the market will probably penalise you for it. But I think those 5 have got probably a good chance of getting there. The only thing that could go against them is if the Bitcoin price stays where it is and costs become an issue, and so that maybe some change in strategy that way. But I think from listening to the likes of Ben, he says they'll get there and it'll be energized. It won't be like installed, it's energized. We've said to these CEOs, is it going to be energized? Don't just give us a number, because you could have these machines in a garage, and if they're on the site in a garage, I mean, we've seen it at Corsicana, we've seen their transit area where machines come in. There's like 150,000 machines come in that transit area, but they're not in the facility. So we want to make sure that when they come out and quote this, we want to be seeing that the energized position for all these miners. So that that is the stipulation. It's not about how many machines you've bought. They've all bought these machines, or they're paying down these machines now. Most of them have got them all paid off already. Just a case of building those facilities, get the machines installed, and somebody switch that bloody button on in the corner, which is electricity.
Well, and it's so funny how this discussion goes full circle. We started off talking about the CoreWeave deal and the stability that those HPC contracts bring these miners in times when the Bitcoin price isn't where we want it to be. We end off the discussion talking about the variability in energy pricing for Bitcoin mining, in this case, IREN. So, Anthony, a great discussion today. Love the detail, love the charts that you're able to provide. I'll pass it back to you for any closing thoughts if we've missed anything. But really interesting to see how things have progressed. And like you say, with the pullback we've seen in Bitcoin price in the first few days of August here, definitely some challenges for the miners with the current macroeconomic environment. We also didn't even talk about the political positioning in the States, but former President Trump came out so strongly for Bitcoin at that convention. Now Kamala Harris's polling numbers are starting to creep up, so that's causing more contention there, but we'll save that one for tomorrow, Anthony. Anyways, back to you for closing thoughts. Thanks so much for your info today.
Yeah, I mean, kudos to Marathon for putting out a good update this month. We just want more of them, so take that on board. Great update by Core Scientific. Continues to be the big news story of the year. Continues to be on every Wall Street analyst desk. They're fully focused on the HPC at the moment because the Bitcoin price is where it is. But should the Bitcoin price go up by 3x in the next 12 months, I think the focus will change to Bitcoin mining. But it has to hold at that price. It's going to 150,000, then dropping down to say 100,000, because that's not the number. We've already heard from Sam Tabar. For his contract, Bitcoin would have to be at 130,000 to start even seeing that Bitcoin was the better option than HPC. So these companies that are currently with big clients and are in a better position. And just going back to IREN, they've also put on their update their HPC business, and that increased to 1.2 million for the month of July. Up from just under $1 million to the previous month. So that's close to a 50 million run rate in terms of annualized revenue for HPC. The margins in terms of electricity costs versus the revenue are really, really good. So it's 98% margins. However, you've got to have bought these GPUs. So, that's that's another story. But a good day's updates in terms for different reasons, and we look forward to seeing the remaining miners get their updates out in the next day or so. We can talk through those as well and have the full month completed.
Yeah, looking forward to the live podcast tomorrow, Anthony. 10 a.m. Mountain Time, you guys. It'll just be Anthony and myself. We're going through all of the production reports we've seen so far, and really this head-to-head battle between the margins of HPC versus Bitcoin mining and where this will take us. So, Anthony, great discussion. Thanks so much for your time. Guys, smash the like button. Feel free to subscribe. Let us know in the comments below what you think about this CoreWeave expansion and the numbers we saw from IREN, Hut, and Marathon. We'll see you here tomorrow, 10 a.m. Mountain Time.